Fat Daddy, baby. A lot of people just blew it, y'all. Like, a lot of people just blew it for everybody, unfortunately. I just had a conversation with one of my business partners. She's a relationship manager at a well known national bank. And she told me that basically people were getting the no doc loans, the no doc funding options, and they weren't paying them back on time, right? So people are out here, yes, helping people get no docs funding. And if you follow me on Instagram and TikTok or YouTube, you see different shorts that I make or reels, TikToks, whatever, where we talk about no docs funding, right? Where you can access no documentation funding. And we're going to talk about what that means today. But what I want you to understand is that she told me that now the banks are starting to get more strict on the prerequisites, on the requirements that are required of people to get approved for funding now, since people are messing it up out there, right? They're getting the funding, but they're not using it properly. They're not using it effectively. And I'll talk about what I mean by effectively in a moment as well. But what we have to understand, y'all, is that there has never been a better time in history to get rich. There's never been a better time in history to create financial independence, financial freedom for yourself, for your family, for your loved ones, and to really get to that life that you want to live. But at the end of the day, we're in a capitalistic society. So, money is important. It's important because it pays the bills, it keeps the roof over your head, but more importantly, it allows you to actually create the life that you want to live, right? So today we're going to talk about some different principles that are going to help you get to the life that you want to live and how you're going to be able to leverage the banks in the process. Because you see, getting access to funding and credit is a good thing if you use it properly, if you use it effectively. Like, people always talk about, oh, debt is bad, stay away from credit, stay away from debt. If you've ever read the book Rich Dad Poor Dad by Robert Kiyosaki, he talks about how there's good debt and there's bad debt, right? It's bad debt if you're using the credit and the funding just for luxury, just for vacations, just for cars and stuff that you technically can't afford, right? Like, if you can't buy it twice, you can't afford it, right? That's what Jay-Z said, and I agree. If you can't buy it multiple times over, you can't really afford it. You should question if you really need it. But people access funding and they think, okay, now I'm just going to buy this and buy that and pay it back later, but they're slowly digging their own hole. But there's good debt, which is what the rich and wealthy use. See, the rich and wealthy use good debt in order to create assets that will bring in money, right? That will bring in more money than what it costed them in the first place to acquire the asset, right? But they also now have more money coming in than what it costed. And over time, they can sell that asset, they can keep it for generations to come. It depends on what the asset is or whatever the case may be. But it's because they leveraged the bank's money, they leveraged their credit, they leveraged their business credit, right? So before I talk about how to access good business credit and how to properly, get to that process, I want to talk about a couple principles that you might not be aware of. Because you see on social media, in the age of the influencers, right? I mean, we have over 300,000 followers on Instagram, over 150,000 followers on Facebook, right? So people might consider me an influencer or whatever, but I don't really look at myself that way, right? I look at myself as someone who's just trying to help as many people as possible. But in the age of the influencer world, you see online the lavish life, the luxury, the cars, the houses, the traveling, the vacations, the money, the life that you want to live. You see it being put out on the screen, but there's not enough how to, right? Like, there's a lot of little pieces to the puzzle here and there, but if you have a puzzle and you're missing pieces, you can spend all day on that puzzle, but it'll never be complete. So I'm about to give you some pieces to the puzzle. I'm not just going to tell you how to get business funding, but first I'm going to talk about some principles. So that way, when you get the business funding, you understand how to actually utilize it to create your financial independence, your financial freedom, a successful business, right? And not just use the funding to get into a debt trap like most people do. So here we go, y'all. So the first principle that I'm going to talk about is principle, but it's called the wealth quadrant, right? It's also by Robert Kiyosaki. And there's basically four places that you'll find yourself in life, right? You'll be either an employee, meaning that you'll work for someone who owns a business. You'll be a small business owner, basically a business of a certain size. Don't quote me on the amount of employees, but maybe like up to 5 or 10 employees. I'm not exactly sure about the exact number. I don't remember off the top of my head. But and then you have big business, right? We're talking about 100+ employees and stuff like that, right? Big corporations, Under Armour, Apple, Facebook, so on and so forth, right? And then you have investor, okay? So you have these four different places where you'll find yourself in life. So think about it right now. Like, where do you fall at? Maybe you have a couple places that you fall at, right? Are you just an employee? Are you an employee and a small business owner working to, transition into being a full-time entrepreneur, a full-time business owner? Are you just a small business owner? Are you a small business owner trying to transition into big business owner? Or are you a small business owner and an investor? Are you just an investor? Are you a big business owner? So what quadrant do you fall in? Or do you fall in multiple quadrants? Right? And what you want to understand about these multiple quadrants is time and money. Right? See, what's interesting about the time and money matrix is the fact that we all have the same 24 hours out the day. Someone who makes millions of dollars a year has the same amount of time, the same 24 hours, the same 7 days a week that someone who makes, 100,000 a year makes or 50,000 a year makes, right? We all have the same amount of time. So what you have to ask yourself is, how can someone who has the same amount of time as me, someone who's a human being just like me, can make so much more money? Is because of the value that they bring to the marketplace, right? So I always tell people today we don't have an information problem because you can watch YouTube videos and find out a bunch of information, but we have an implementation problem. See, not enough people are understanding how to effectively implement the information in order to truly change their life in a really meaningful way, right? And so when you're an employee, you are giving all of your time. Your time is basically judged by the boss, by the scheduler, right? It's judged by how many hours are available at the shift, how many shifts are available, politics, all sorts of stuff, glass ceilings, corporate politics, all crazy types of stuff. And when you're just an employee, there's so many things that you deal with, right? And your time is judged by your boss. And the time that you have for yourself and for your family and stuff like that are also limited because you have to exchange your hours to create income, exchange your hours wherever that may be, at the job, whether it be work from home or at the job, whatever the case may be, right? So you're exchanging your hours for dollars and your income is, at this certain amount of money, whether it be per hour or salary. And that's what the case is when you're an employee. Now, when you have a small business, you're able to make a lot more income because you own the business. So, because you're able to bring in all of that revenue, you're able to strategize how you spend your money and you're able to keep that profit. Then you're able to make more money depending on the service or product you provide, depending on how many customers you get. But typically, you're able to control your time and money now that you're a business owner. Now, big business, you have a lot more, different fires to put out, right? You have to scale, you have employees, you have payroll, insurance, benefits for the employees. You have different things that are going on with the company when you're a big business. But generally speaking, when you're at that level, you're making more money, right? And when you're at that level, you should definitely have systems in place and people in place. And ideally, if you own that business, technically, you should be able to have more time, but you're still going to be spending a lot of time and money into the business. So what's crazy is, ironically speaking, even when you own a business, the larger you get and the larger your business grows, really the more time that you're really gonna, reinvest back into that business. So the ironic part is the fact that, you could work 8 hour shifts a day, 5 days a week, but as an entrepreneur, you might be working 12 hours a day, 7 days a week when you're building it up and when you're trying to get it to that level. And even at a certain point, you might still be putting in that work, but there'll be a point in time where you'll have systems in place, people in place, and you'll be able to choose when and when you don't want to pull out, take some time off, vacate, spend time with your family, whatever the case may be. But you will definitely have your seasons of grind. See, we're all always grinding. Everybody's going to grind, whether you're an employee or whether you're a business owner. I don't down anybody for whatever choice you take, but you're always going to grind. But then you also have investor, right? The investor, they're able to make more money at a larger rate with less of their time, typically, generally speaking. And it's less responsibility, less overhead, typically speaking, because you're not fully responsible for operations. You're not fully responsible for certain things. You're investing into something, right? Like investing into stocks or crypto and stuff like that. And so what you want to just realize going into, this year and, going into the following years is understand what part of these quadrants that you fall into and where you really see yourself and where you want to be. Of course, small business, big business, and investor is, a better place to be than just employee because you're now able to be in control of your economy and control of your money more so, and more so in control of your time. And so I highly advise and suggest that you understand these differences so that way you can understand where you want to be at in life. Now, the second concept that I want to talk about is like I was talking about earlier, good debt and bad debt, right? There's a total difference. See, someone that gets approved for $50,000 but goes on a vacation to Turks and Caicos, rents out the luxury vehicle, gets the best hotel, does the whole ball out for the whole week, comes back home, buys some Louis V and Gucci, and then gets puts a down payment on a new car. I mean, you're cooked because none of that stuff is going to make you money back. So now when they're asking you for the payment back on that 50K, you're looking like because you spent the money on things that will not bring cash flow, that will not bring you money, that will not bring you profit. So that's bad debt. And we have to understand the difference. Good debt is if you have $50,000, but you put it down on an investment property. For example, let's say you got a piece of real estate, all right, and now the down payment was $20,000 because you used the FHA loan, for example. You use the other 30,000 for renovations and for whatever the case may be. And now in a year, 2 years, 3 years, you have appreciation on this property, and now you have more equity. And now you can sell the home, and you done made 100,000 or more dollars just by acquiring a home with this down payment on FHA, staying in it, fixing it up, and as it appraised over after a couple of years, and you look at the equity, it turns out that you have a large equity, in the home that you can now pull out, or you can now sell the home, whatever the case may be. But that's called good debt because that investment now brought you a return on investment, right? The ROI. What's the ROI? A lot of times we're spending money on things that bring us no ROI, right? So when you get this funding, you want to make sure that you're spending it on things that will bring you a return on investment. So let's talk about how to actually get approved for business funding now, right? We understand that when we get the business funding, we're going to use it we're going to use it as good debt, not bad debt. We're going to use it to invest, not just to blow cash. We're going to use it to bring cash flow, right? Not just to blow dough. Okay. Now we're going to talk about how to actually get approved for the business funding. All right, let's go. So what you want to understand is when you're applying for business funding, it's all about the credibility of your business. A lot of times people are structuring their business the wrong way, setting it up the wrong way, don't have the proper things set up, and that's why they're getting denied. Also, on top of that, to preface this, if you have a new business, you want to make sure that you have a 700 plus credit score, because if you don't, you're going to get denied. Because if you have a new business, you don't have bank statements, tax returns, all that sort of stuff. And so they're going to use your personal credit report or the owner's credit report as a personal guarantor. And they're looking for a 700 plus with no negative remarks on there, no collections, charge off, late payments, none of that. And you want to have less than three, even less than two inquiries as well before you apply for business funding. All right. And it's important to understand this because a lot of times, you see different things online and stuff, but you want to understand what position that you're in before you're applying for business funding. There will be a hard inquiry on your personal credit report when you apply for business funding that requires a personal guarantor. So you just want to make sure that your personal credit is all up to par before you even apply for business funding if you have a new business. If you need help fixing and building your credit, you can head to the link in my bio. We have a done for you service where we'll fix and build your credit for you, help you remove all the negative items off your credit report, and coach you on how to build your credit report to a 700, 800 plus credit score. So now let's move on to the actual business structuring side of things. So when you're structuring your business, first things first is you want the name, right? So you want to make sure that the name isn't already taken. So you can go to namecheck.com, namelicks. You can go to GoDaddy.com and go to the domain search and see if the domain is already taken, right? You can check different places to see if the name is already taken. And if it isn't, then go ahead and run the play, right? And then after that, what you also want to make sure is before you run the play, make sure that the name isn't a part of a high risk industry. Because when your name is a part of a high risk industry, or even worse, a restricted industry, then you could possibly get denied for funding, or you'll be in position where they'll ask you for more information when you apply. And you don't want to be, held up when you're applying for funding because your name puts you in a restricted industry. For example, some restricted industries are ammunition, bail bonds, check cashing agencies, energy, oil trading, finance, gambling, pawn shops, political campaigns. These are different industries that you're going to get highly, highly restricted processes that you're going to have to go through, or you're going to automatically get denied. So be aware of these restricted and high risk industries because it's definitely going to have an impact on you getting approved for business funding. Now, you want to make sure that you have a business address, okay? The business address is different from your residential address. It's different from the house that you live in or the place that you stay. You actually want to get a business address. You can go to regis.com. You can go to opusvirtualoffices.com. These are just a couple examples where you can actually get a business commercial address that will be represented for your business. So that way, when you apply for business funding, and they search your business up, they see that it's not in the neighborhood. They see that it's not a house or that you're in an apartment, right? You go back to what I said earlier. You want to make sure that your business has the credibility. You want your business to look like Apple, like Walmart, like Google, right? So you want to have that proper business address. And next, you want to make sure that you have a business phone number as well. That 800 number is going to stamp you and stamp your business as a real business. Okay, instead of just the local area code number. Now you can still have your local area code business number for operations, different stuff like that. But when it comes to business funding, you want to be able to have that 800 number to really show that you're legit, right? Now you can go ahead and grab that EIN from irs.gov. Your EIN is sort of like your social security number for your business. It's how the IRS is going to identify your business for tax purposes. So you can go ahead and grab that EIN after you check the name and made sure that it was all good, right? You got your address, you got your phone number. You can go ahead and get that EIN. Furthermore, you want to make sure that you have a business email address, not a Gmail, a Yahoo, a Hotmail, whatever the case may be. If your business is Apple Street Apples, then you want it to be info@applestreetapples.com, right? So you want to make sure that you have a proper business email as well. So that way, once again, this all goes to the credibility of your business. Now you want to just make sure that your business is listed as well on the 411. You can go to listyourself.net, set your business up on Google, set your business up on Yelp. So now when they search for your business, they can find it anywhere and everywhere where people are typically searching up for businesses. And then you also want to set up your business website as well. Different business funding applications will ask for your business website, and it doesn't have to be robust or professionally made for your business funding applications. It can be simple. And the more simple it is, actually, the better, because the less that they're kind of in your business, the simpler the process can be at times. But if it's your website and all that, that's totally cool. I'm not saying to hide anything. I'm just saying that if you have a simple website, it's totally fine. But have some sort of website with your business name and all that. So that way, when they search up the business, they can find it and they can find the website and see that everything is, coherent. Everything lines up. And then depending on the business that you have, you want to make sure that you have any business licenses that you may need to operate business in your state, whatever, your business may be. Now you have your business properly structured, y'all, and get excited because when you have a 700 plus credit score, you have the proper structure for your business. The next thing and the last thing you want to do is go ahead and set up your DUNS number for your business. Your DUNS number helps you start setting up business credit score for your business, right? So there's a business credit score the same way you have a personal credit score. And you want to go to get your DUNS number by going to dnb.com, and you can set up your business in dnb.com, and now you can start to establish business credit for your business. Now, if you need help fixing and building your credit so that way you can actually get approved for business funding, especially if you have a newer business, or even if you have a business that's been around for a while, but if your business isn't making over 15, 20, 25,000 a month, which is some of the current requirements for funding that they allow without you having to have a personal guarantor, basically meaning that if you're not making over $15,000, $20,000 a month with bank statements, tax returns, and stuff like that, they're going to pull your personal credit, y'all. So if you need help fixing and building your credit, if you have any negative items on your personal report, then you can reach out to me. Go to the link in my bio or go to graduate-to-never-employed.com, and we're going to get you right. You can book your free consultation with us, and my team and I will make sure that we restore your credit and help you get in position so that way you can get approved for funding. But if you already have a 700 plus credit score, but you would like just some help, some expertise on maximizing your funding and getting the most funding that you could possibly get, accessing 0% interest business funding, then reach out to us and we'll also make sure that we help you out as well. All right. We've helped hundreds of people fix and build their credit. We funded millions of dollars, and I'd be glad to help you all too. But listen, y'all, make sure you remember that when you get this funding, remember what we talked about today. We're going to use this funding wisely. We're going to use this funding as the rich and wealthy use funding to create cash flowing assets so that way we can create the life that we truly want without having to spend a whole bunch of time trying to exchange our hours for dollars, not making the money that we want to make. Because we know, like Warren Buffett said, if you exchange your hours for dollars, if the only way you make money is by exchanging your hours for dollars, then you will work until you die. So you have to find ways to make money work for you, or else you will work until you die, y'all. So listen, it's your boy. Make sure you like, comment, subscribe, and I look forward to seeing y'all in the next video. Let's make sure we graduate to never employed, y'all. Make sure we get to that financial freedom. Make sure you get to that life that you want to get to, because nobody's going to get you there but you. All right, let's get to it, y'all. Fat Daddy, baby.